Okay, great. I mean, Mohit had a very interesting insight, which is around every decision you make is at some level a trade. Uh, when you cross the road, when you get out of the house, when you decide to join job A versus job B. I mean, they're all elements that are slightly speculative in nature, and that is a fair element of chance. And I guess and one nice optic, as Mohit mentioned, is to sort of view them through the time frame in which they play out. Right? I mean, it could be how soon does the result play out. That determines whether it's a trade or an investment, right? And I guess you could also say that in some cases an investment could potentially pay out faster than a trade. Because one thing that really it's ironic in crypto itself, right? If you look at is Ethereum or Bitcoin an investment? I mean, you think about it, right? I mean, what is Ethereum's core value proposition, or what is Bitcoin's core value proposition, right? I mean, we decentralize finance, and we take finance to the masses, take out the libertarians. I mean, sorry, take out the middlemen. The whole libertarian promise was around achieving a lot of things, and to a certain extent, one could argue that that the traders have taken over. I mean, Ethereum and Bitcoin are fundamentally assets that are most important to the trader community, to the institutions trading money, even more than folks that are actually building products on top of it, right? And in fact, it's become so polarized that you're looking at the trading business is now called the money crypto or trading crypto, and then the product building business is either depending on where you said it's a bunch of exchanges and all that is still supporting trading, or you have these enterprise blockchain efforts, quote unquote enterprise blockchain efforts that are completely different, disparate or sort of completely tangential to the original promise of Bitcoin, right? So what's a trade and what is an investment? I mean, and again, just because Ethereum/Bitcoin is now more of a trade than an investment, does it make it less attractive or more legitimate or less legitimate? I mean, those are some of the things that we, again, from a semantics point of view, one optic to look at this through, right? And again, sort of round out that circle, I would say that typically folks tend to overestimate things in the short run and underestimate things in the long run. I mean, this is a famous law. I think Bill Gates also has mentioned it, and there's probably a law around this somewhere. And you see that with any new technology. You saw that with all the earlier technologies, with mobile phones, with the .com boom, with crypto as well. That's clearly being played out. So I would argue that if you look at the situation through that lens, over a long term, every trade hopefully becomes a good investment. Good trading strategy becomes a good investing strategy, right? So what I'm saying is, once you've decided that you want to trade with maybe 20% of your savings, what you then need to understand is, unlike the real estate business or a slightly mature business, where somebody's getting a property worth 1 crore or $1 million if it's coming out at $500,000, you immediately have to sort of smell test, and there's that level of information asymmetry that needs to be taken care of. But in the crypto space, what I'm seeing is there are these groups that actually promise access to the hottest upcoming project from the valley or from wherever into the latest yield farm or the decentralized exchange or whatever. And 9 times out of 10 they are too good to be true. But that's part of the process. I mean, these are all long shots. You probably will make up the losses that you've made in the 9 investments if you get one right. And I guess that's part of the attraction. We've all been through the ICO bull market, and I'm sure we've had luck with some, and we've had not very good luck with some others. So the key takeaway, the key point I'm trying to mention is, it's not a zero-sum game. There is a lot of value to be captured in the sector. So 9 times out of 10, when somebody shows you something that's too good to be true, that is actually likely too good to be true. But in some cases, in fact, for example, this token that I'm working on, which is where I tell people that these are the names that are already in there, right? And they just want to jump into it, right? But there are 9 other tokens that people come and chill to me, and they tell me, so and so is going to come in, Galaxy is going to come in, Pantera is going to come in, and that's not going to happen, right? So it's a bit of a gamble, and the information asymmetry is something that you have to live with in the sector. And to the point of if it's too good to be true, why wouldn't you take the whole thing? Again, from personal example, this token that I'm working on, I mean, they're raising 4 million, and I don't have 4 million to throw in them, so I'll probably throw in a few Bitcoin. That's all I can share, right? I mean, so that's also the other thing to keep in mind. I mean, trade with what you can afford to lose, right? But don't bet the farm or bet the house on any one trade. Look at trading like you're a VC, right? I mean, look at the VC, venture capital industry. They look for one home run that gives them 100x and returns the whole fund, right? I mean, if you look at the most successful funds, 2 or 3 exits returns the whole fund, right? And more. 90% of exits are just water down the bridge. It's part of the learning curve. So I guess trading is a bit like that. When you get a good hand, just go all in, sweep up the house. I guess that's one way to look at it.
Yeah.
I'm sure Mohit will disagree there and say that's not part of a systematic strategy. And that's also true, But, from an overall macro perspective, that's how I would look at trading.